Mic check, 1 2 1 2. What's going on, everyone? Happy Monday. I hope you're all well and doing great as we get ready to kick off this week. I don't think this is going to be a week to disappoint. Historically, seasonality of this third week of September is one of the worst all year. Markets already since Friday, Thursday kicking off. The volatility is already rampant, and we're just getting started at this week. Everyone knows Wednesday, we have the countdown right now, 2 days, 4 hours into the FOMC. And right now the markets are pricing in 80% chance of a 75 basis point hike. The surprise since last week, ever since the CPI reading, is that the markets are now pricing in a 20% chance of a 100 basis point hike. And although it doesn't seem that the Fed is data dependent for this meaning that last weekend they went ahead and leaked that they were going to hike rates 75 basis points. If you remember a week ago, the markets were pricing in something drastically different. They were pricing in roughly, let's call it a 60-70% chance of a 50 basis point rate hike. And then there was 30% chance or so of a 75 basis point hike. Markets have over the past week severely tightened expectations, and now we get ready for the FOMC. And I can't imagine it's going to be a non-event. I mean, the price action over the past week has been anything but a non-event. And as you can see, as the implied Fed terminal rate continues to keep rising, you're seeing subsequent rate cut expectations continue to fall. Get ready, strap in. It's going to be a volatile week. It's not just the FOMC on Wednesday. We're also looking at the following day, Bank of Japan press conference. I assume they keep policy as is, but you never know. You're also looking at the Swiss National Bank. It looks like they're going to continue to tighten up. Expect some stronger moves on the Swiss franc. You're also looking at the UK, and then followed by, and by the way, today, I know that a lot of people over in England are mourning. I want you to know, as friends, as brothers, we mourn with you. And then we have on Friday, out of the Eurozone, we have not only PMI, services and manufacturing, Fed, Chair Powell also speaking again on Friday. I suppose just in case he needs to save the markets going into the weekend, I think they have him on the calendar. And it's not a given that the markets are going to collapse into nothing. We don't know. We've seen some massive volatility over the last week, and we need to do our best to follow what's happening and stay in front of it. That's what we're going to do today. We're going to look at some charts. You know what, Rico? I'm going to, after this little session here this morning, I'm going to go ahead and brew some matcha and put together today's CTM only session. And then I'll be in the groove for that for sure. Izzy, Jason, Rashid, great morning, everyone. Glad to see you here on this Monday as we get into the flow, as we find the flow for this week and get into it. We have DXY chart up, and the DXY right now is into resistance. We are looking at markets pricing in, as we just said, 75 basis point hike come Wednesday. And, I wouldn't be surprised to see further upside momentum here as the DXY right now, although into resistance. Anytime we're consolidating into resistance, here's the horizontal resistance, and price consolidating right below it. It's normally bullish. It doesn't have to be bullish, but I can't imagine trying to fade this pre-FOMC. Let's wait and let's watch. And that's probably going to be a lot of the theme right now is wait and watch. But nevertheless, if something presents itself and you're looking to get in and get out, or probably or potentially even get in, and if it winds up being something a little, we have also today, because of the Queen, we have London's closed. We also have a holiday in Japan. So 2 of the 3 major markets of the world are closed today. Expect there could be some massive tying up of positions into tomorrow pre-FOMC. Expect volatility before and after the main event this week. At least that's what I'm looking for. today might be the quiet before the storm, and the perfect storm is setting up. That's the title of today's video. The perfect storm is we are looking at right now no growth, high inflation, stagflation, and I think it's exactly the way they want it. When people talk about the Fed is behind the curve, I think they're always ahead of the curve. When they talk about what their expectations are, then they never hit them. So right now, or this Wednesday, when you look at the dot plot expectations going forward, take that with a grain of salt. Go back into the Wayback Machine and look at, you can look at zero hedge, go to particular periods, go to December 2018, go to the crisis, the Great Recession, 2008, and look at what the investment banks were offering as what they thought was going to happen. People thought, by the way, QT throughout 2018 and 2019 was going to run significantly further than it did. Very rare for anyone to get it right. We have a history, and we're going to do our best to continue making sure that we're able to stay on the right side. And it's not always easy. And if you get on the wrong side as a trader, as an investor, as a market analyst, what you want to do is get back on the right side as soon as possible. DXY right now consolidating underneath resistance is quite bullish. The 10-year continues to run and run high, making new yearly highs and hitting right now 3.5%. We're going to keep watching anyway. I know people don't like usually to look for anything counter trend, but when things get extended, if we have a sell impulse, it is the best place from a risk to reward basis to go ahead and enter into that trade. We're going to be watching. Obviously I'm looking for an extension over here. It's a little hot. It's a little, back off right now. That's the vibe. Back off. Oil continuing to collapse. I think we could clean this chart up a little bit. And what do I mean by that? I mean, first of all, downside targets are really pretty close at this point. We're not too far away. At the same time, I don't think we need this consolidation that's occurring. I'm going to focus more on the trend line at this point. I'm going to lighten this up. I'm not going to get rid of it. I'm going to make it very light because it's still there. It's still above us. I'm just looking for the cleaner chart right now. What about this resistance right now? So I'm going to raise this up over to here onto where price, first came into the support and then before it moved down, because if I follow it a little left, it looks like the overhead resistance is now over here. This is support, support, support. And then when we broke down over here, that became resistance. And I'm just paying attention to what the market's paying attention to. Because we're in the middle of a sell impulse right now that continues, I'm watching these two lines over here. The trend line, the sloping downward trend line and the horizontal resistance over here. Oil right now, below those two areas, continues to be quite sellers are in control. We know we looked at that the U.S., why they did say that $80 oil was where they're going to be looking to potentially begin refilling the Strategic Petroleum Reserve. They walked that back. So oil right now continues to price in global recession, right? China's still on lockdown, right? Did I see more of the zero COVID restrictions in place? I believe so. I'm not exactly positive. NASDAQ, let's take a look at it. And I mean, we are this little supply zone away from going ahead and testing the June structural low. You can see right now, pre-FOMC, support is being found and held. And not much to read into. Again, I just want to set the tone, set the stage. Today is market holiday in London, in Japan. U.S. markets are open right now. I imagine, as there's been a lot of mostly retail fear, I think most of the fear we saw over the weekend is coming from retail. When we look at things like Ethereum, which we'll look in a second, I think that what we're seeing is max pain play out. Max pain we looked at in a lot of people were looking to play the merge through the options market. Now, I don't know whether or not they were actually looking to actually hold Ethereum at the time of the merge in order to go ahead and grab the fork, or what exactly why they were hedging themselves. I think a lot of people who were bullish on Ethereum were actually looking to speculate in the options market. And you know what? They all got punished. Max Payne was 1350. Price right now 1320. I think those expire on the 24th. Well, they do expire on the 24th. We'll continue to watch that. Anyway, back to the Nasdaq. Good morning, Mike, and everyone. I was Mike. I was gonna say on this Monday morning here, you know, positioned well. We'll talk about that in 1 second. It's not a good feeling as the markets crumble, even if you're positioned well. I see a lot of people out there very emotional. People who are not like people who just have a one-way bias, and then right now as the markets are falling, they're very emotional. That's a sign. That's something to pay attention to. Because if you're in control, you shouldn't be emotional. I'm not emotional, and I'm very much control. At the same time, it's not a good feeling when you look around and you do see the perfect storm brewing, and you don't see even right now at this moment, you don't see the sun breaking on the horizon. Now that could change. It's always darkest before the dawn, the dawn, but it is dark out there right now. There's no question about that, and I think tomorrow we're going to be looking a little bit more into the credit markets. Luke shared on Friday a really good chart that I want to get into. Now I'm not prepared to go ahead and talk about it this morning, so I'm not going to. But we'll talk about it tomorrow. I don't think that we're anywhere close to where things are breaking. We're not. I mean, we're not even anywhere close to where things are breaking, and the Fed would need to step in. Now, that doesn't mean this Wednesday. I doubt it, but you never know. It doesn't mean this Wednesday that the Fed comes in and hikes and then the market deems that, you know what, that might be too much for a while. I can't imagine that. We have a couple of months between this Fed meeting and the November's Fed meeting. I think that is going to continue to be a very difficult market conditions, and we're just going to do our best to maneuver through it. This is not any type of Goldilocks period where you sit back and you just kind of build and push positions. You need to be alert right now. I do know that most of the selling has literally taken place already. Most people, I'm talking about professionals, they are hedged through the option market. Do you think that they're all going to collect good on that? Probably not. I think that people's downside expectations are probably a little bit right now, I want to say overblown. Overblown is the correct word. And at the same time, I don't think right now as the Fed is tightening, as QT picks up, that we are looking at putting in any type of substantial rally. But we'll see. We have the green line over here, right? We still have inverse head and shoulders developing and playing out, and the unthinkable could happen. The unthinkable would be a breakout above the green line, and then all of a sudden risk making new all-time highs under these circumstances. I don't know. I can't imagine that's going to happen right now. I can't imagine that the Fed is backing off, and I can't imagine that the market is going to price in a policy error over here. But we'll see. And just to reiterate that over these next couple of months, data dependent is going to take center stage, and each high impact news event, whether or not it is PMI, whether or not it is CPI, whether or not it's jobs numbers, are going to be the focus of the market. And then more importantly, we're coming right into earnings, and third quarter earnings are really going to set this tone for what happens coming into as we hit the fall. So S&P 500 continues to also find support over here. I could take out the yellow line just to clean my chart up. The yellow line, by the way, Mike, thanks for smashing the like button. Anyone else here on this Monday morning as we begin? You know what? You were gone for the weekend. You know what? Everyone who spends time working out understands. Sometimes after a couple of rest days, that first day back, you kind of pushing, and it's a little difficult. And then, you get back into it. And then by the second or third day, you really found your zone and your groove. It's the days that are hardest that are most important. That's how I feel today. I don't feel that, anyway, we'll get back into it. S&P 500 also finding some area of support over here. And, I can't see much else developing right now, except that I'm going to be watching if there's a breakdown. If we break down below this area, coming into the FOMC, you never know. There's a lot of space over here. There's a lot of space over here. So why some people might be thinking NASDAQ looking a little bit better, that pre-FOMC, that, you know, things might go sideways or stall out. You never know. Let's be alert because we are in a volatile market right now. Fabio, great morning. Great to see you over here. Thank you for smashing the like button. So glad that you, thanks for the love on that video released last night with Ben. It was so enjoyable, and Ben was really in the zone. I love when people have a huge passion for the markets and are able to express that. If you could see the smile on his face as he was presenting and you could feel the energy, that's why I'm here. So that was really enjoyable. So where else are we at, fam? Let's get going over here. I want to take a look at, Ethereum. Sometimes the simplest TA is the best. Let's take a look over here at Ethereum, and we could see that the way that we left it off was first this upward sloping trend line. We had the break of it, and just below it, we had this like last line of hope, I'll call it. It's coming off the July low. And that's how we left it. You could see it. The reason I went back to it, because you could see it right over there. And then I go back over here. And then we broke down. I just want you to pay attention because I want you to be familiar so that as it happens, once again in real time, and it's going to happen a lot, you'll be aware. And it was the breakdown. And then what? The retest. And then the resumption down. And that is conquering the markets all day long. It's very like these patterns repeat themselves all the time. It doesn't have to be successful. You could have the breakdown and then you could have had the retest and it could have failed. Getting back above that broken support, that would have been a failed retest, right? But this was not. This resumed down over here. And you could see as price on the 8-hour made the lower low, that could either be the entry or the entry could be off the resumption proving itself. Boom. Great to see you here this morning. Great to get the whole crew in here. And you could see off of the descending wedge right now, that is a failure occurring. Also pay attention over here. You could see as price came into the low of the descending wedge, why some stops were taken out initially. You could see the wicks down over here. Price then bounced before then failing. We could go ahead and remove this over here, as we are no longer in that descending wedge. And just to like continue here, you could see that this is probably the most important line as any type of meaningful resumption taking place on Ether. And then I was just trying to get an idea whether or not that was still like a greater or bigger descending wedge. It's not. I want to see if we got a nice clone channel over there. We don't. Nope, it's not clean. Not yet. So we're just going to keep anyway the most important line. That's when this is resuming upwards to the upside. Now, it's too soon for me to put it in. I don't want to put it in. But you could see that that is a double black diamond trend line in effect. We'll watch it. We'll watch it. What about on the Bitcoin? Similar situation occurring. You all could call it out as we look at it. You had the trend line, right? So effective for TA because of the risk reward is the best. And you had a breakdown. And then what happened? Came in for the retest. Now this retest, pay attention, this came in horizontally, right? It didn't come in to test the broken trend line, but it came in breakdown, retest, and then resumption down. These stops are taken out right over here of the descending wedge, and price right now is bouncing off of that. We could go ahead and we could say this descending wedge now has now been nullified. I'm going to zoom out and see if there's anything over there. And the same line that's developing on Ethereum is also here on Bitcoin. And right now, markets have a very, let's say, negative seller's bias, but we'll continue to watching as we're holding those short positions for when that resumes to the upside. And I mean, like we're just positioned well right now on Bitcoin, holding positions into profit, and on Ethereum, very much into profit. If you saw any type of, let's say, post FOMC, if you saw any type of risk rally, let's say a sharp rally, because expectations are this week of the year, third week of September, historically a nightmare. And when you look at the general tone out there, I mean, we're in the midst of the storm. Everyone's feeling it. Seems to be even a general lack of hope out there. So you never know, right? Because everyone is looking for further downside push. The June lows are stone throws away. Whether you're looking at equity markets, we're into that last bit of support before a test of the June lows. Here on crypto, we are like last night we were like 6% away on Bitcoin from the June lows. And if we have any type of sharp move to the upside at any point in time, likely these positions will be closed and again giving up profit, right? That's the way a momentum-based system works. There's no problem with that whatsoever. And we could see now, though, after talking about the choppiness that was taking place, we are now looking at actually putting up on Ethereum double-digit gains, and that's welcomed. People last week were talking about or wanted to get into, I think it was on Friday, the question came up, if we could talk a little bit about jumping the chasm. What we're looking at over here, or what I have them defined over here, is the hype stage, right? And then after the hype stage, this is whether or not you're looking at Bitcoin here. Same thing is taking place on Ethereum, except Ethereum is much earlier on in the facing reality stage. By the way, look what's going on with Ethereum, with the different competitors out there. And then not only that, you're looking at Ethereum making the move right now to proof of stake. You could see these are very much facing reality events that take place. And whether or not Ethereum is going to make it out of the facing reality stage, whether or not Bitcoin makes it out of the facing reality stage, these are all largely unknowns, but you could see this is the technology adoption life cycle. You could look at, and it was Amazon during its facing reality stage that led me to understand what S-curve adoption was and what it looked like. Going forward, I could say to you that right now, it seems that adoption continues. I'm looking at the number of addresses with non-zero balances. And even in this bear market, massive bear market, 75% drawdown on Bitcoin. We looked at last week on Thursday. I gave the presentation on why the most important factor to look at is what is the Fed's policy, the central bank policy. We looked at the monetary base total, and we showed how that was the strongest signal for what happens in Bitcoin and the cryptocurrency market. Not just Bitcoin and cryptocurrency market. I mean, just pull up a chart of the NASDAQ. It's the same exact thing. The second most important factor, in my opinion, is the growth, right? That's taking place. You're not having any type of S-curve adoption if you're not seeing adoption take place. We continue to see that adoption take place at even during a bear market at a really, really, really substantial rate. It says to me, by the way, the internals of the market remain very strong. People right now, 65%, almost 66% of the network has been holding Bitcoin for a year or longer, right? These are hodlers of last resort. They're not here to sell their Bitcoin. Why they might be, and some people might be looking towards, 2024, 2025. A lot of people are really looking towards the period after that into 2028 and 2029. And by that point in time, that's when Bitcoin is expected not only to have made it out of the facing reality stage, I believe it makes it out of the facing reality stage within the next, I have 2024 to 2025 over here. This is very soon. You're talking a couple of years. And then it should be entering the ultimate market opportunity. That is when it will be known. And diminishing returns is as clear as day right now. By the way, drastically diminishing returns. I know that myself and almost everyone else I know out there had much higher expectations, right? Six-figure expectations for what we were going to see during this last cycle that just passed us. Exponential growth, though, I think will be very common or very much understood, even by proponents of diminishing returns, right? In that conversation with Ben that I just had last week, and I was asking him, how do you reconcile diminishing returns with S-curve adoption? And, you can't look out 6 years and give people any type of expectations of what you're seeing right now. Otherwise, they're going to think that you're dead wrong. They're not able to kind of look that far out into the future. And therefore, his messaging on diminishing returns in present time is on signal. And it makes a lot of sense. But you could say that, well, the adoption continues right now, that the Bitcoin cryptocurrency is for sure at the mercy of the Federal Reserve, of central bank policy. And right now, we are seeing monetary based, right? We're seeing it pulled back, and appropriately so. When you're looking at something that is a hedge against currency debasement, when the currency is not being debased, it's not going to perform. This is a rather good time to continue to, first of all, build up your overall knowledge of the financial markets. It's what we do here every day. Now, again, some people are looking for a list of 10 things. Give me your 10 golden rules. That's not how it works. It's quite complicated. It requires actually each and every day putting in the work, being a student in the market, finding out what lessons the market's teaching you, and then using that compounding knowledge to give you the clarity you need in the markets. I mean, look, the way that I see it, or the way CTM was over the weekend putting together there's a difference between someone who's buying and holding a portfolio, right? Compared to someone who's actively trading the markets. With CTM, it's a lot different, right? Because we are trading the markets. I think it was, I forget the exact allocation, so I can't say it, but I think it was 87% Ethereum, 13% Bitcoin. I think that was the perfect allocation right now for CTM. And the thing is that, Bitcoin, while for me is a core spot position, as far as if you're looking to trade these things, there's much more alpha out there on Ethereum. Whether about Solana and Matic, I don't know. I prefer Ethereum only because of the liquidity in the market. Lots of people have focused in on and dialed in on Cardano as well as for trading, which offers a lot of alpha. For me, it's focusing my concentration. I know what I could do. I know what I could do well. I don't really need to be out there looking for what might be potentially the next flavor, the VC flavor. There's going to be one. And I don't think, well, actually, you know what, Predix? In the conversation in the video we uploaded yesterday with Benjamin gave a like I was talking about, he was well in the zone, and he gave a really good opinion, thoughtfulness on what happens with a lot of alts next cycle. If you didn't get a chance to see it, I highly recommend it. It was a good one. And this is the signal of all signals, right? Monetary debasement is inevitable. Stack those sats, and it seems that the perfect storm is brewing. The one problem I have right now with the markets is my expectation that the Fed, that the central banks want to push out the cycle as long as possible. I feel that most people's expectations of the way they view the market is that the Fed is looking to actually crash the markets, and it's going to happen right now. So one of those is probably right. I mean, because even if the Fed is able to extend it further, right, inevitably the markets are going to run into, from all this tightening, which there's a little bit of time delay on how that tightening has an effect on the economy. It's why when we look at, rate expectations coming out into 2023, we could see that the more they tighten, the more rate cut expectations are priced into the market. So I think things are going to break eventually. But the way I look at it is that the Fed is trying to extend the cycle as far as possible. I don't think that the Fed is in a rush to break things so that they have to come into the rescue and then move towards balance sheet expansion again, because that does have a really diminishing effect on it. It's why each expansion, the balance sheet, is substantially higher. If you go back to the Great Recession, it was $850 billion, right? And then we saw QT running. And then you come back to 2020, it was $4.1 trillion. I mean, that's 5 times more balance sheet expansion taking place because you're seeing a diminishing effect on the expansion of the balance sheet. And that's going to continue. And I think as we move forward over these next 10 years, we're going to see much shorter, more violent cycles, right? On whether it's the expansion and the dump of liquidity into the market, as well as the pulling it back. And you could see here this cycle. And this is not new. This is something we said in 2020. We talked about how long the cycle was from 2008 to 2020, 12 years. Expectations was going forward is going to be much shorter. Here we are, and it's much shorter. But I think what caused a little bit of a surprise to myself and a lot of us out there, everyone, was the pace at which the Fed tightened in a very short time frame. And that shows that the cycles are indeed becoming shorter and more violent. We'll see. I mean, look, what I've really have grown much better at is always, whenever I hold an opinion, is really trying to take the other side and push on it as hard as possible. And again, my thought is that the Fed is trying to actually extend the cycle out as far as possible. General opinion seems to be that they are looking to crash things. So one of those is going to be right. And I have to assume, why I can't yet, I'm talking about it with you in case any of you could give me a little bit of clarity on that. If anyone could help me see it a little bit different. But I can't imagine they're in a rush to go ahead and break things and expand the balance sheet further, because all that's going to do is that's going to speed up the pace of inflation, which is quite apparent, has grown quite sticky. I mean, I think we're seeing it right now. I mean, as far as the cycle being shorter, they didn't run this time, QE1, QE2, QE3, Operation Twist. We went from balance sheet expansion, 2 years of massive QE, $1.2, $1.4 trillion a year for 2 years, and then to extreme tightening. So maybe I'm wrong, and maybe that they are growing quicker and more violent, and that like sooner than later, we're looking at that next balance sheet expansion again. And I mean, if that, I can't envision it, but it could be happening. So again, I'm not sure, which is why I'm trying to talk it out with you. It's, for me, like I can't imagine that they want to break things quicker than later, but here we are. How do you extend the current form of monetary policy? So this is also kind of probably set up for later in the week, right? Where we get to talk about the credit markets. And then we have over here, like the Fed just announced Fed Now, right? The line, I think it is the building blocks or the foundation for the digital dollar and the CBDC. And we could go back to this last massive crisis we had and what we talked about on this channel in March and April of 2020. And it was that, look, I don't think that the markets are going to crash again until the Fed is ready to introduce the digital dollar to the central bank digital currency. And at that point, we said that it looks now that the earliest they're able to do that is 2023. Well, here we are. I mean, we are months away from 2023, and now the Fed is messaging that they're getting ready to launch the Fed Now in 2023. The reason why the Fed would crash things is to introduce it. Like, no one wants to, or any person who has the ability to still think for themselves, there's no way that they want to embrace complete monetary surveillance and open up and accept central bank digital currency, unless they were forced to, unless that the system was crashing, unless that there was no food at the grocery store, there was no heat in the house, there was no gas at the gas station, and they're like, look, the only way we could fix this is by launching the digital dollar, and then everyone will be like, please give it to me now, and that's where we are. So we'll talk more about it, whether or not it's tomorrow or in the week ahead, or we have a busy week with the FOMC. But soon, I'm setting it up, and I'll make sure that we are on top of it. Right. Right. A lot of people think that the Fed will be using the building block of XRP. I don't know. I doubt it. Again, if I'm not sure about something or I hold one position, you got to entertain the other. So I think that, it warrants thinking about it. But why the Fed would really embrace Ripple's technology and their, I don't understand that. I mean, you saw that Silvergate bought the technology of Facebook's Diem. And the Fed, if they wanted it, could have easily have done that if they wanted to take someone else's technology. I don't think that Ripple's, XRP token is anything, that, anyone else couldn't build. So I can't imagine that they would do that, but it's something you have to consider, right? Look, you should consider is the earth flat, but you should be able to do the research pretty quickly and figure out which opinion you hold and why. And if someone wanted to, it's so cheap right now, it's ridiculous, right? There's a reason why it's cheap. The company itself owns the majority of the float, and the company Ripple's business model is to sell XRP to retail to fund their operations. So there's usually a reason why things are priced cheap. And every once in a while, you could find a penny stock that goes on to become something substantial. The odds of it are very low. You're much better off dollar cost averaging over the last 20 years into Apple or Amazon than buying any penny stock. But a lot of people are human nature. We're attracted to that. So yeah, which part was the fear? Yeah, they are. That's not FUD. That's their business model. That's not FUD at all. That's not FUD at all. That's their business model. That's not FUD. That's why you see the unnatural rips in the price of Ripple and then the waterfall down. But that's not FUD. That's not fair. That's truth, right? That's absolute truth. So this is something that this is a good thought over here. And the one worry is that you will see, I don't care if you don't like it or not. You please do smash the thumbs down if you don't think that Ripple's business model is to sell the token XRP. But at the same time, this is something that people knew back in 2017, 2018. This is nothing new. This is quite old, right? And I guess if you're new to the space and haven't really done your research yet, you'll find it really easy and really quickly. That's like their business model, and so how else they make money? How else they fund their P the pay of their executives, right? So, yeah, there's no question about that. I mean, I thought that was crypto 101, and I guess not. But look, I think this has also been largely a little bit of my fault of not doing a better idea. I can't say that. That's not true. I protected everyone before the SEC filed their lawsuit against Ripple. I told everyone that they were a real risk, that exactly would happen before it happened. A lot of people at that point took the same attitude. That's FUD. That's not true. Everyone, that was done on the public side, and everyone will know that's exactly what happened. I'm sorry. You know what? That goes both ways. You can also spread FUD, and in this case, the FUD is that Ripple is anything but what they are. So there you go. I was talking about something important, right? And Ripple is not that. I was talking about this over here. I think some macro global event will push the Fed to begin QE earlier than anyone expects. There are a lot of people who hold this opinion, right? And if that happens, if the Fed is forced to ease into this high sticky inflation, that would be very, very worrisome going forward. And I could imagine that, everyone knows when they see the CPI at 8-9% and they're looking at their cost of goods that are 20% higher, it doesn't add up. I imagine that we would be looking at the end game a lot sooner than later. It could happen. I think, though, that, as we look at these high energy prices, especially in Europe, there was a beautiful chart I wanted to share with you this morning, and it talked about different countries and then worldwide, and it talks about their energy cost in 2020 and then 2021 and now in 2022. And in 2022, they are grossly higher worldwide, not just in Europe. And if at any point in time we start seeing governments trying to help people with these higher costs of energy, which is because of inflation and then really poor policies, I mean, it's just like doubling down on what has been horrific. It could happen. It's something we need to be prepared for. It doesn't look like that's what they want to do, that they want to go ahead and, but it was prefaced here that some global macro event. And really, I think that it always comes back to the credit markets. And again, that's why we'll be looking a little closer into that in the days ahead. But every single pivot by the Fed, and when I say pivot, and that's return to balance sheet expansion, has revolved around something breaking in the credit markets. It's why the price of the stock market, right? A lot of people are focused on their 401ks. A lot of people are focused in on the prices of the indexes. Jerome is not. He's focused in on the credit markets, and they were much closer to some type of risk event in June than they are today. However, that could unfold and change very quickly this week. It's a big week. We all know that. We are ready for it. So, yeah, I mean, it seems obvious. And so there's one thing that you got to wonder, or that I wonder, is when everyone sees the same thing, is it going to happen? But I have to tell you, some things are very clear, and then they do happen. And one of those things that I don't like is that it seems to me very clear that what they are doing and progressing towards is the implementation of the central bank digital currencies. That first came on my radar. It was in 2018, 2019. I think it was 2019 when the IMF released a white paper called CBDCs, and they talked about all the central banks releasing the CBDCs backed by the IMF's special drawing rights. We seem to be very close to that taking place. It's very worrisome, but it seems like one of those things that are inevitable. I remember as a little kid, we would talk about one day they're going to have these like phones where you could like see people in video, right? And, it took quite a while, but here we got, FaceTime or whoever you want to do it. All the things that you just know are going to happen, they seem to generally always happen. This seems like one of them, and it's a great concern. And that's something else that I want to just start talking about. Again, I have that as we're looking at the official announcement of 2023 being the launch of FedNow. We need to take a look at it and just be aware of what's happening around us. Simon, I'm going to get ready right now. We got a Monday session ahead of us. And listen, everyone, thanks for being here this morning. Before we get off, though, I just want to make sure there's not anything else I want to cover with you. I think we got everything in I wanted. I'm going to play a little honeymoon and then come back and say if we want to talk about anything. Oh, that's not honeymoon. Yeah, look, thanks for having the conversations. and the tough ones. And the tough ones are the things you don't agree with. Not just you, all of us. November election, let's get past earnings. We got earnings coming up. We got the FOMC this week and then earnings. Yeah, I have to add one more thing about XRP, and specifically as they get closer to, and I assume that each day that passes, they get close to some type of resolution with the SEC. And if there is a settlement, and then I would expect some type of, let's say, strong move to the upside. If you get closer to Fed now being launched and people are speculating that XRP is going to play the foundational of central banks, central bank digital. Remember, the IMF released a white paper years ago. I don't know that they need them, but if they did, I assume there's going to be many occurrences where actually XRP does what it does best, and that's rip, right? And the whole thing is that I'm not really about speculation. I am about calculated investments and calculated returns. I don't speculate in the markets. It's why I don't buy altcoins, right? Even if I know or could, I told you when alt season was going to happen a year and a half before it happened and it happened right on time. I knew when alt season was going to occur. Got it right with the cycle. I choose to go with what I deem to be, let's say, offers the highest potential from a risk to reward basis, but is not speculative. If someone wants to take 1% of their portfolio and buy XRP in case it becomes the foundation of the central bank digital currency, go for it. That's not going to make or break you either which way, but think about it like that, on those terms. Someone who's taking their life saving. I know I met a lot of people over the summer who put, young people in their mid-20s, just starting families, just getting married, and put their life savings into things like Cardano and XRP. Those were the two. And that to me is very risky. That doesn't make, what makes a lot of sense in my mind is, well, if you believe that Bitcoin potentially is going to be able to jump the chasm and then reach that ultimate market opportunity, and as a young person, you're going ahead and you just continue to dollar cost average into Bitcoin, that right there is smart and calculated. There's no given that's going to work out, but it's a much higher percentage of you being successful than going with something less risky. So, and that's all we are. Yeah. So again, that was MV. One thing about life, one thing about the markets is that you need to be constantly evolving. And one thing that's evolving is the nature of the market as you're looking at Bitcoin and the cryptocurrency market gaining in market cap, right? So if you want to see signal, and you could use that signal MV to answer that question 100%, watch the video that I released on Thursday. So just go back to the channel. It's called Liquidity. tomorrow I could bring it up for you, MV. I have it up ahead of time to make it easier for you. But if you go to the video that was released on Thursday, the second word in the title is liquidity. And you watch that video, which is showing when the sweet spot of the bull market happens in Bitcoin, as actually the monetary base is being expanded, that is when alt season is going to happen next. It can't be timed as in the past. I don't know. We're talking here for an hour about what the Fed might do and when they might do it. When we actually see the expansion taking place, that is going to be the time for alt season. Now, will alts be significantly off their lows by that time? For sure, right? For sure. Now, does that mean that's the time? Like, if you're going to try to pick the bottom, understand that could be a fatal mistake, because you could see some of these alts still come off drastically from where they are there right now. You don't know, right? It's just not risky. So if you're playing something that's highly risky, altcoins, you want to do it when it is like the momentum's with you. And if you want to know when the time is, that's the video to watch. Or you could go back to the video also where I did the presentation to Ben. It's called Bitcoin is a Hedge Against Monetary Debasement. And if you watch those two videos, you will have the absolute clarity about when is your best time to speculate in altcoins. All right, everyone. Yeah, liquidity supernova. If you watch that video and then watch within a week, it's the video labeled Bitcoin is a Hedge Against Monetary Debasement. And if you watch those two videos, you will have the absolute clarity. All right, everyone, have a beautiful day. Thanks for being here and jumping in on this Monday as we get into the groove. If you are on your way out and on this Monday, you enjoyed being here together, go ahead and hit that like button. Lots of love to you all. Have a beautiful day. May God bless you, and I'll see you tomorrow morning.